Good morning. I'm Pete Najarian. This is The Take for Market Rebellion on a Tuesday morning, and an interesting day to start out the week and start out the month of June yesterday because the markets had this big pressure to the downside early on, about a triple-digit loss, and all of that got reversed almost immediately, very early in the session. And even before that happened, the Nasdaq actually was trading in the green and trading pretty well, but it was really just the Dow and the S&P that were pushed to the downside a little bit. Well, that didn't last for very long. That was reversed and absolutely started flying to the upside. As a matter of fact, we went from 25,242 in the Dow to 25,475, finished up over 90 points yesterday. So a big reversal and a big move to the upside, and a lot of the different participants were across the board. So what were some of the names? Well, the sectors: energy, airlines, cruise ships, hotels, you get the idea, financials, all of those participating on this move. And to finish up the day, as I say, the Dow actually finishing up about 90 points or so. The Nasdaq finished up about 0.6%, and even the S&P with that big reversal finished up nearly 0.5%. So a nice solid move to the upside. I think surprising a lot of people, just given the fact of what we'd been watching on television over the last week or so, in particular over the weekend. And yet the markets just continue this plotting move to the upside. And a lot of the different names that have been leading, it's been shifting, it's been rotating. But yesterday, for instance, I mentioned some of the sectors, but Boeing, ExxonMobil, you got Goldman Sachs, American Express, those names, huge moves from the NASDAQ side of things. When you look at Zoom moving to the upside and got up towards 205, you had Tesla, another huge day for Tesla. American Airlines and United Airlines, we talk about these airlines and the cruise ships and some of the movement we've had there, as well as the hotels. That's really been something that we've been watching more and more, and we've seen that. Now, they are coming off extremely low levels, so let's always keep that in mind as well. But the one interesting sector that we talk about a fair amount, and I bring this up a lot when we're talking about specifically the NASDAQ and people talk tech, I oftentimes like to look over at the semiconductors, and that's been an area that's been kind of running in place for a while. They haven't done anything badly, and it's not like they've sold off necessarily, but been holding around this 140, 141, dipping down a little bit below, maybe a little bit above, but just kind of running in place for a little while, which is okay. Hitting a pause button, so to speak, waiting as other areas are leadership either to the upside or the downside. And meanwhile, the semis just kind of continue to just kind of hold on. Now, energy, as I said, that's pretty strong. When we look at Exxon, we look at Chevron, and then you start looking at some of the beta names that actually were moving yesterday as well. Apache, Noble, Devon, those kind of names really started to push to the upside yesterday. So that was something to watch. Now, this morning, we're looking at a market that right out of the gate wanted to be up over 100 points and was up about 0.5% and moving, actually adding to that. But today we're seeing the NASDAQ. Well, yesterday was the flip side. Today, flip side again. But this time, now the NASDAQ's down about 30 points right now. So it's sitting in the red. Meanwhile, the S&P kind of hanging in there. It's moving up, but nothing dramatic right now. I am looking at oil. I just watched oil as it went by, up about 1.5%. We're talking about oil that's trading somewhere close to the $36 level. So that's something to keep an eye on as well. That big move from the energy space and from oil from that 17 up into the low 30s, and now just kind of grinding away and grinding a little bit higher, it seems, each and every day. Giving back a little bit here and there, but generally the move has definitely been to the upside. We've talked about gold for a while now, hanging around that 1750 level. That's near where gold is today, as a matter of fact. And volatility. We've been talking about this range in volatility for a while now, 27 to 30. Well, that seems to be holding in there pretty good. And you don't even have to go much above 30. We really haven't seen much above 30. We've had a little bit of a push over 30 and then pulled right back once again. But call that a very, very tight range, as I say, between 27 and 30. And where are we trading right now? Well, when last I saw it go by around a little over 28. So that's where we're seeing volatility right now, right smack dab in the middle of where that range has been, and justifiably so because of the movement that we've been seeing across in the markets in terms of the percentage moves. It actually sort of adds up and gives you a little bit of sense. Now, if we start to contract a little bit more, I wouldn't be surprised to see volatility index maybe come back in a little bit more even. But that's if we start to contract even more so, because we've watched what was a market that was giving us 1,200, 1,500 point moves in a day to a market that was in 500 type moves in a day. And now we're starting to see a market where it's much more stable. We've been watching the Dow. Yes, it reversed yesterday, and yes, it opened up today, but these aren't anything close to the kinds of moves, highs to lows, that we had been seeing. So if this trend continues, we will see that volatility index start to pull back a little bit more than where it is right now, because where it is right now, you're looking at under a 2% move daily, but not a whole lot underneath that 2%. And we aren't getting that right now. So if we're not getting that out of the S&P, then we're going to start to see that volatility index start to ease back and pull back even a little bit more. But that's something we're going to have to watch for. Obviously, there are so many different factors affecting the market each and every day, and we all know that. And it's news headlines every single day, whether this the tensions or the pandemic or what's going on in terms of all of the rioting and all the rest of that and the protesting, all of that. There's something new each and every day. Oh, and by the way, with this pandemic, we still have all kinds of drug companies that are coming up with potential vaccines and so forth. And so that's been something that's been really powering the NASDAQ and specifically powering the Biotech index, which, by the way, if you're looking for an area that's trading down, that would be the area today. We'll look at the Biotech, and the pressure is on the XBI a little bit today. Nothing huge, but down a little over 1%, 1.3%, somewhere in that range. That's definitely pulling on the NASDAQ, because so many people look at the NASDAQ and say, well, it's tech. It is tech, but it's also biotech. And a lot of these biotech names that have been screaming to the upside. And we talked about this for well over a month or more. When everybody else is focusing on the Power Five, we've been keeping you sitting in front of your computers, understanding it's not just the Power Five. It's also a myriad of other names in the tech space. And on top of that, it's biotech. And you look at that biotech index, just take a look at the XBI, look at the IBB, take a look and see what's been happening with those indices over time and a lot of those individual names, and you'll see exactly what I'm talking about. So what's weighing on the markets right now? Well, Win, Lulu. Lulu's had this unbelievable move to the upside. You got Zoom pulling back a little bit today. Not a lot, not a lot, but a little bit. But Lulu definitely pulling back. You got Facebook pulling back. And as I mentioned, the biotech. So all of that influencing, certainly when you're looking over at the NASDAQ on why the NASDAQ right now is in the red, that sort of screams out right there what's going on. Now, I find this to be so interesting. Now, yesterday, the volumes were, the first day of June, volumes were just pathetic year to date, comparatively speaking. I'm pretty sure that yesterday was the lowest volume day of 2020. If it wasn't the lowest, it was right there with the group of whatever the lowest volume days were. The interesting part about that is, in a normal year, that would be a record volume, because it was a little over 21 million contracts yesterday, 21.4 million contracts trading yesterday. Huge number. But not so huge when you compare it to some of the numbers that I was giving you from last week, the 4 trading days of last week, where we traded 29 million, 31.5 million, 29.5 million, 29.5 million. And now all of a sudden, whoom, you just lose that huge momentum and volume. But the most interesting part about this whole thing, as we lost that volume, you still had the unusual option activity. I counted well over 35, maybe 40 unusual option activities that actually hit and were valuable enough for our guys to put up on our site. And so despite the fact that those volumes were off of where we had been, and as I say, would be record in any other time, it still shows you how much activity really is out there. And some of the numbers that I'm telling you right now, just huge amount of trading going on yesterday. I was a big participant in that. I went through the list last night on our round table of all the various names and how much that I was adding and some subtracting as well from previous positions on the move to the upside. So I just thought that was really, really interesting when you're looking at a year that's averaging over 28 million per day. And yesterday we traded just around 21.4 million. So significantly off what some of those volumes had been. Now, we always like to hit a little bit of a unusual for you here on the take, and Schwab stood out for me today. Now, there's countless names that I could have picked today, and I'm just looking through this. Zynga's hit so many times I can't even tell you. Hitting again today, even some rolling already from previous buys, because the stock has made a pretty decent move to the upside. People rolling up and out and buying a little bit of time and getting some more upside. So that could have been one of the names. It's not. The name I'm going with today is Schwab. And part of the reason is I've been talking about the financials for a while and all the different opportunities that I think still exist there. And a lot of people say, well, it's dead money. I think they're wrong. And so far, I think I'm sitting pretty good in terms of that, in terms of using volatility to be your friend, and volatility against some of these financial names, like a Citi, like a Bank of America, like a JP Morgan. You take your pick, any of those kind of names. It's a little bit different name, though. So we're going with Schwab today. And here's what we're seeing in Schwab that made it interesting. And I like when I see the risk reward of these options. And this one made more sense because the implied volatilities really aren't there in terms of turning this into a buy rate or something of that such. So what we're seeing is almost 5,000 of this week. And again, we've been talking about the theme. It's been a theme all year, but specifically as we've been in this pandemic and coming out a little bit as things are opening up, we have been seeing nothing but short-term. 1 week almost exclusively. As a matter of fact, of the trades that I put on yesterday, and I think I put on about 7, every single one of them expires June 5th, which is Friday. Every single one of them. It just shows you how amazingly short-term right now people are thinking, understandably so, given the news flows and some of the reactions and how fast the reactions can be from these news flows. So these are, again, Schwab, 4,700, the June 5th expiring, the 37.5 calls, trading for about 60 cents. Stock was trading just below that strike price, trading right around 37.40, somewhere right in that sort of ballpark. So gives you a little something about what we're seeing out there. There's probably about 6 or 7 or 8 at least. I'm only about the first hour, maybe 90 minutes almost into the trading session. But let's just take a last look. So we're hanging on. We're not where we were. We were significantly higher than we are right now, but still up about 110 points right now in the Dow. NASDAQ down about 57 points, so that slipped a little bit more. S&P nearly flat. So again, as I talk about volatility, we're sitting right around 28. It makes a lot of sense. People, I think, are holding on a little bit to the volatility because they understand that at any moment we could see this movement actually start to react probably in a much bigger way. If not, we're going to see it start to slip away. Folks, have a great day of trading. Educate yourself. Understand the options world, risk reward, all of that. Understand all these Greeks that we talk about all the time, where it's theta and delta and gamma and all this. They're all important. It's all factored into how things are priced. And you will have a lot better success if you understand this side of the world. And as a matter of fact, as I said, even though the volumes were low yesterday, even though that might have been the lowest volume day of this year in 2020, it still would be a record volume at any other state or any other stage of year that you want to pick. So gives you a little idea of the growth and where we are right now. Folks, have a great day of trading. This is the Market Rebellion. Enjoy your day.